Welcome back. In your business update, AI agents used in financial services such as wealth management and client engagement could soon be subject to more safety checks before carrying out a task. These agents are often used to review documents, generate structured assessments, and to create more personalized insights for customers. To ensure its proper use, the Monetary Authority of Singapore is proposing that such actions of an AI agent are checked against policies before carrying out a task. The Safeguards for Agentic Finance at Runtime framework aims to align the actions of agents with an organization's policies. MAS says AI agents are carrying out financial tasks autonomously and at a speed beyond human intervention. The framework will be tested through industry pilots before broader adoption. MAS is inviting more industry partners to join its work group to shape future versions of the framework. Now, the MAS framework comes amid concerns over agentic AI. So let's take a look at the potential cybersecurity risks. Now, without human oversight, AI agents may authorize illegal transactions. If hacked, they may even cause data breaches for banks. A single point of failure could also disrupt connected systems without staff being aware. An industry observer says AI agents are fast, but may make mistakes that affect the entire system. He says the MAS framework is important to manage these potential risks and ensure compliance with policies.
They're trained based on historic data, but if the agents are facing a scenario they have never seen, they might make mistakes. So we need to understand the boundary. And we also need to understand the quick propagation of potential errors.
And for more analysis, we're joined by Associate Professor of Accounting Kelvin Law from NTU's Nanyang Business School. And Prof, good to have you with us. Can we start with talking about what are some of the biggest risks that Singapore is trying to prevent before these tools become mainstream?
Yeah, I think the biggest risk is the AI agent can act on some of these wrong answer before anyone notices. For example, they can be moving money, approving credit, and then sometimes giving some unsuitable financial advice before anyone can step in. I think the question here is because the AI agents, sometimes they can be really, really fast, and then they can be automated. So a lot of times, the human, they are kind of lagging behind in controlling the behavior of the AI agent. So if AI agent is too fast, and then sometimes they make even a small error, but then if they are at scale, there will be a lot of potential impact on the customer and consumer. So the safe idea is to put a checkpoint on before any action, try to put some guardrails. For example, who is the agent? What can they do? What kind of boundary do they have? Is there a specific action they are allowed to do? So the framework here is actually kind of like prevent some of these biggest potential risks out there when we apply the agentic framework.
Well, you spoke about speed earlier. So how soon could consumers in Singapore see AI agents carrying out these financial transactions at scale as well?
Yeah, this is an interesting question. Actually, some of the companies I talked to actually applying or at least they're exploring these AI agents in a small scale, relatively confined way. Sometimes maybe small transactions, sometimes maybe a designated, kind of merchants. So they have been testing behind the scene for quite some time, based on my discussion with them. I think here, if we talk about like how fast you will be implement or deploy on mass, I think it's still sort of far ahead. But then behind the scene, actually, some of the companies have been doing this for a while. So I think the framework is good in a sense. It's kind of a set up a really clear framework. I wouldn't call it guidance. I wouldn't call it like a regulation. I call it framework so that everybody can speak the same language, understand what they need to do. Maybe it's on the payment term, maybe it's on the boundary, maybe it's on the advice. So it's not handing the AI agent a blank check, but then kind of like give them a guardrails, put them in a confined space so that they can achieve their best. Yeah.
And speaking of that blank check, in practice then, what would stop an AI agent from making a bad payment or even giving unsuitable advice and sometimes acting outside a customer's instructions? You talked about the speed at which they could do this earlier. How can they be stopped in practice?
So the most important thing is having a guardrails. So once we deploy the agent, it's really hard to stop them in time, because like they can do it really, really fast. Maybe 1 second they can implement like 1,000 or million transactions. So something we have to put in the implementation to make sure that they follow specific framework. For example, identity. When the agent kind of like act. So first of all, they need to tell the the human what kind of model are you, what's your name of the model, how do you identify yourself. Second, we need to give a really clear boundary on what you can do. Maybe you can only make a specific payment to a specific customer within a specific window. So we kind of set up a mandate so that they know, the AI agent know what they can do. I think the final thing, most important, is we need to have the audit log, so that it's not the audit log written by the AI agent themselves, but then have another AI agent kind of monitor another AI agents, sort of like kind of keep an eye on them to keep track on what has been approved, what has been rejected. So we kind of like have a log to see what goes well and what goes wrong. So that is really important as well.
So there are many layers of protection here. Can you also share some examples of what safer aligned solutions could look like?
Yeah, there are many applications that will be aligned with the framework. For example, maybe some of the company, they set up a small agent, and the small agent really taking care of 1 to 2 merchants, and then they will approve the payment to 1 to 2 merchants within a certain, promotion window, so that they have really specific boundary. Or you have some insurance company, maybe they kind of assess the applicants, the risk profile, but then they are only confined to a specific set of information. They will not go above and beyond to look for other information, and then kind of like see whether the information in a specific subset of data, whether they can achieve certain goal, for example, approving application. Or you might have a situation where you have an investment advisor, maybe the investment advisor sort of like get the AI agent to write a summary of the wealth status of their clients, and then at the end of the day, the wealth status report will be routed back to the financial advisor as a human in the loop to do a final check. So at the end of the day, all these things, they have to be have some sort of human in the loop to do the final judgment call.
Professor, thank you so much for your analysis. That was Associate Professor of Accounting Kelvin Law from NTU's Nanyang Business School.